Hi there, good morning and welcome to this exciting day to talk business and intricacies of it. My name is Blyden Dukema and it's Business 360. In today's edition of Business 360, we'll look at the key features in it, beginning from the Olympic situation regarding advertising giants in Japan. We'll also look at key features in the forex market as well as the stock market and intending features around businesses around the globe. In Uganda, it's a huge concern that the poverty mark for most of Ugandans is going quite low, but on the other hand, the middle class expanding. And the thin line between the rich, the middle class, and the poor is increasing. Also in Kenya, there are remarkable difficulties in the country, and nothing seems to work the way they really want it to work because government policies are not taking place. In today's Business 360, we'll look at key features in the world when we return from this break.
Nigerian police, which is the only one allowed by Muslim. Our governors have to share police powers with the president as stipulated by the constitution. We do not have a federal government police force. We have the Nigerian police force, which shall be administered, organized, and supervised by the Nigerian police force.
No, my lord, I want to say something. I want to say something here. Perhaps it might also enlarge the scope of people who should be invited here for examination. My lord, if we cannot find those who literally...
Big country, Nigeria, legally speaking. Join us every
Friday from 5 p.m. to 6 p.m.
for Legally Speaking.
Thank you for being there. It was a quick break, but let's begin with what's happening in Japan. Japanese advertising agent Detsu Group and 5 other companies have been indicted over alleged bid rigging of contracts for the Tokyo 2020 Olympics. It comes after regulators filed criminal complaints against the firms and 7 unnamed individuals. The announcement follows months of investigation into alleged corruption in the planning and sponsorship of Olympics and Paralympics events. Tokyo-based Dentsu is Japan's biggest advertising agent, and as a situation, they're facing investigation and indictment of corruption. Coming to Africa, the World Bank projects that East Africa will get richer under the African Continental Free Trade Area. Countries like Kenya, Uganda, Tanzania, and Rwanda have been projected to grow significantly. Real income is anticipated to rise by 10% in Tanzania, the second largest economy in the area, between 2021 and 2035. Real income will rise by 11.8%, 3.8% and 3.6% in Kenya, Uganda and Rwanda respectively. While data for Burundi, South Sudan and the Democratic Republic of Congo are unavailable. According to the World Bank, the African Continental Free Trade Area has been well designed to strengthen the economies of East Africa. Still within Africa, looking at Kenya's situation afterwards, but Uganda first. Despite a decline in poverty over the 7 years leading up to 2020, most Ugandans still face the risk of slipping back into poverty, according to research by the Ministry of Finance and the Uganda National Household Survey. These vulnerable Ugandans are the transient poor, who are just barely above the poverty line. This vulnerability increased in the 2 years of COVID-19 between 2019 and 2020, when the percentage of impoverished Ugandans rose from 18.7% to 21 0.91%. The research designates 16.99 million Ugandans as insecure non-poor, which refers to households above but near the poverty line, are sensitive to shocks and can relapse into poverty, while 8.13 million are classified as poor in the country. Looking at Kenya. The Kenyan National Treasury has proposed that the government increase spending. Based on an anticipated rise in tax collection, the Treasury proposes to boost government spending by 15.9% to 3.66 trillion Kenyan shilling, about $29.2 billion in the next fiscal year. This is despite the fact that Kenya has failed to meet some of its revenue targets. The National Treasury based its proposal on the promise of anticipated increase in tax revenue. However, the Kenyan Revenue Authority needs to catch up to existing goals according to the most recent numbers. The concerns are there in Kenya amid increased budgets, yet cash is not forthcoming. Coming to Nigeria. Nigeria's cash crisis has forced consumers to adopt digital payment methods, providing short-term boon for fintech firms and mobile money operators. According to Fish, mobile money operators are well placed to capitalize on Nigeria's unbanked population, particularly in rural areas, where the physical distance from a brick-and-mortar banking institution prevents people from opening an account. Meanwhile, Nigeria's central bank hopes that a growing use of e-payments will increase the number of citizens within the formal financial system and reduce corruption and black market trading. In Nigeria, the total amount of currency in circulation in the country dropped from 3.29 trillion naira as of the end of October 2022 to 1.38 trillion naira at the end of January 2023 as a result of the naira redesign policy of the Central Bank of Nigeria. According to figures obtained from the CBN, this represents a drop of 1.91 trillion naira in the 3 months period. Remember, the central bank had talked about taking money away from circulation back to the banks, and that has been the situation. Dangote Cement has announced a 20 naira dividend per share, 20 naira dividend per share for the end of 2020 fiscal year. This was revealed in the 2022 audited financial report of the organization published on the website of the Nigerian Exchange Limited. The corporate notice signed by the acting company secretary Edward Imodege partly read, a final dividend of 20 naira per share subject to the appropriate withholding tax and approval will be paid to shareholders whose names appear in the register of members as at the close of business on March 30th, 2023. It would be a good time to look at what's happening in the global economy, the economic perspective. The big question is, how long will inflation linger? Inflation from the US to Europe to the UK started in late 2021, peaks in 2022 and is coming down. Unfortunately, further improvement in the inflation rate may come quite slowly. Here are 3 reasons why the process of disinflation is likely to be a protracted ordeal. Let's have a report from Blueprint Nap Chief Economist CME Group.
Inflation from the US to Europe to the UK got started in late 2021, peaked in 2022, and is coming down. Unfortunately, further improvements in the inflation rate may come quite slowly from here. The inflation that is still with us may be exceptionally sticky, and getting back to a 2% target rate may be extremely difficult. There are 3 challenges. First, demographics. Labor forces are barely growing and even shrinking in a few places. A lack of labor force growth puts persistent upward pressure on wages, not necessarily so much as to cause inflation to rise again, just to slow its decline. Second, commodities. A broad-based rally in commodities may be supported by a scarcity of supply. Investment has been sluggish, and it takes years to see production increases. Climate change may adversely impact agricultural yields. And third, higher interest rates are a blunt tool. Higher rates impact asset prices such as equities, bonds, and housing much more than consumer prices or wages.
talking about inflation in Europe, we'll begin with an outlook of inflation in France and Spain. Inflation is a rise in prices which can be translated as a decline of purchasing power over time. Annual inflation rate in France accelerated for a second straight month to 6.2% in February from 6% in January, above forecast of 6.1% according to preliminary estimates. The inflation moved back to 1985 highs seen late last year, pushed up by the cost of food and services. Meanwhile, inflation in Spain also resumed its upward trend to 6.1% in February, compared to 5.9% in January and expectations of 5.7% led by higher electricity and food prices. It would be a good time to look at the chart indicating inflation in France, what's been happening regarding the cost of commodity and the value of money in France. According to the charts, it's indicative of ups and downs, as at April 2022, inflation in France was at 4.8%, went further upward to 6.1% in July 2022. By October, after coming down slowly, it went back up to 6.2%, a peak of it last year, further at 6.2%, before dropping to 6% in January 2023, and back up to last year's peak of 6.2%. The difficulties are still there around global economy, and it's quite difficult for many, even in African countries, but for some countries, inflation is slowing down. Let's move to the commodity market to see the events around the commodities. We'll begin with energy, a market commentary from the energy market. Dan Deming is standing by, but the peak of it is that natural gas futures rally to a 2.5-week high after weather patterns raised short-term demand forecasts. Dan Deming discusses this.
In today's energy markets, let's take a look at natural gas futures as they're moving higher today. Natural gas futures higher for a fourth consecutive session, and today's price action has pushed them up over 6% in the futures market, currently priced at 2.71, just off the intraday highs, which correspond with the highest levels in 2.5 weeks. And when you look at some of the driving factors, it appears the primary driver today are the shifting weather forecasts into March. We're seeing weather temperatures shifting to a cooler type of environment. At least the forecasts have shifted to expect cooler temperatures than what were previously forecasted for March. And with that, the expectations for demand for natural gas appear to have shifted as well, I think helping to provide tailwind to the pricing structure here the last couple of days, and having a significant impact today with natural gas.
That's a perspective from Dan Deming. Let's move straight to the energy market and see what other energy commodities are doing, talking about US crude oil, the WTI crude, and Brent, Nigeria's price benchmark. This morning, crude prices have been solid, at least comparatively to the rest of the days this week. But crude oil current price $76 per barrel. The outlook of the market this morning for Brent is $82 per barrel, upward slightly by 0.655 point, a 0.81% appreciation. For natural gas, it's slightly downward this morning. Gasoline, slightly upward, a little here, a little there. But the key one would be coal. Coal price $196 per ton, downward by 12.7 points, a -6% this morning. Let's have a look at the in there. Metal market also showing some decline this morning for gold and silver. Slight decline for gold, $1,810 per ounce, downward by 6.4 points, a -0.35% decline. For silver is a similar story, $20.5 per ounce. For copper, slightly upward, steel downward by 25 points, iron ore downward this morning, and lithium with no significant change in the market. Let's have a look at the agricultural market too. Soybeans is downward this morning by 6.25 points, a -0.41% decline. Current price $1,512 per bushel. For wheat is $697 per bushel, slightly upward this morning by 1.65 points, a 0.24% appreciation. For lumber, it's upward by 8 points this morning. Malaysian ringgit per ton for palm oil, current price 4,167 Malaysian ringgit per ton, downward by 57 points, a negative 1.37% decline. Let's also go to the forex market to see what the market is saying this morning. Looking at the forex market, beginning from market commentary with Todd Colvin, the Euro futures declined to a one-month low, below rallying. Let's look at what Todd has to say regarding this. Todd Colvin.
Euro currency opens the session moving lower in the front contract, getting all the way down to 105.42. That marks the lowest since January in the year-to-date low. However, later on in the session, we saw it bounce higher and get back above 106, actually closing higher on the day. So an early decline reverses and moves higher. Now, the dollar, via the dollar index, has been hovering around 105. It backed off slightly from that level that it attained last week, giving the euro a little bit of a nudge higher. Again, the euro currency ending higher in the day, back above 106. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility in the euro currency bottomed out.
Thank you, Todd. Looking at the market, let's see what the forex market is saying regarding the euro against the US dollar, and we'll get to talk about other pairs. The euro against the US dollar, euro has been back up after lingering around 1.05 points yesterday, but slight upward movement of 0.0017 point, no significant difference in the gains for the euro. For the pounds against the US dollar is a similar story, back up from 1.19 to 1.20 points. For the Aussie, struggling against the US dollar. Let's also see what's happening regarding Naira against the majors. Naira against the majors in the market. For the US dollar against the Naira is 459.95 points. It's still within that range, not being able to go past 460 Naira to 1 US dollar. For the euro, the ranging continues for most of these markets. Let's look at Naira's perspective in the parallel market, the black market. In the black market this morning, an average of 762 Naira to $1 is the buying rate in the black market, and selling rate is 750 Naira to $1. For the pounds to Naira, the buying rate is 930 Naira, equaling £1, and 910 Naira, equaling £1 if you're selling it. For the euro to the Naira, the buying rate is 790 Naira, equaling €1, and 775 Naira, equaling €1 at the selling rate. It would be a good time to also have a look at the cryptocurrency market. Bitcoin. It's been a battle for Bitcoin after hitting $25,000 mark at the end of last week. It's been a struggle back and forth within this range, but this morning is downward by 132 points. Market is moving quite fast, a negative 0.56% decline. Current price for Bitcoin $23,260 per one Bitcoin. Ether and the rest of the cryptocurrency market are struggling this morning. It would be a good time to look at what's happening in the stock market. Well, for Asian equity market, it rose this morning, taking cue from positive lead on Wall Street as it to assess the outlook for growth, inflation and monetary policy as well. Investors also digested a raft of economic data across the region, headlined by Japanese and Australian retail sale data, which rose more than expected in January. In Hong Kong, Chief Executive John Lee announced that the city-state will drop its mask mandate starting March 1st. Shares in Australia, Japan, South Korea, Hong Kong, and mainland China all advance. Let's conclude on the Nigerian stock market. Investors retain their confidence in the Nigerian capital market with demands for equity stock raising the market. The market capitalization increased by 0.69% at the close of trading yesterday. The value of investment in the capital market rose by 206.57 billion naira from 29.93 trillion naira to 30.14 trillion naira despite the political tension in the country. The all-share index rose by 234.34 basis points to close at 54,949.21 points. Investors traded 149.78 million shares worth 1.54 billion naira in 3,186 deals. Let's look at the top gainers. Stanbic IBTC led the gainers list with a 3 naira 45 kobo rise in share price, moving from 34 naira 50 kobo to 37 naira 94 kobo per share. Let's look at the bottom losers. FTN Cocoa topped the losers table after shedding 6.9% to drop from 29 kobo to 27 kobo per share. The top volume. Oando led the day's trading with 14.28 million shares, valued at 62.64 million naira. This is it on Business 360. My name is Blyden Kim. Thank you for watching.